They don't tell you this on the news, but something very dangerous is happening inside the banking system right now. And no, I'm not talking about a single bank collapsing. I'm talking about a silent shift that decides who is allowed to have a bank account and who isn't. In the last few months, we've seen a growing number of accounts frozen, restricted or closed with no warning. Businesses, entrepreneurs, public figures, not because they did something illegal, but because they became inconvenient. And this is accelerating. Before I explain why this matters to you, especially looking ahead to 2026, let me introduce myself. I'm Matteo Maglia, Partnership Manager at GloboBanks, the banking introduction company for international accounts. Now, let's talk about what's really going on. For decades, people believed one thing. If you're compliant, if you pay taxes, if you follow the bank rules, your bank account is safe. That assumption is no longer true. Today, banks don't just manage risk. They manage reputation, perception, and political exposure. And the moment you fall outside their comfort zone, you become expendable. This is what called the banking. It doesn't start with criminals. It starts with people who are simply international, outspoken, operating across borders, running non-standard business models, or holding views that creates PR risk. Banks don't need to prove. They don't need a conviction. They don't even need to explain. They just send an email. After a review of your account, we've decided to terminate the relationship. No appeal, no timeline, no discussion. Now, here's the part that should scare you. This is not random, it's structural. Banks are under massive pressure right now. Capital requirements are tightening. Regulators are watching every move. Compliance costs are exploding and margins are shrinking. So, what do banks do in this environment? They reduce complexity. They want fewer clients, bigger deposits, lower operational friction, less reputational exposure. And which means if you're not a boring, local, predictable client, you're a liability. And this trend is getting stronger, not weaker, especially as we move closer to 2026. But why 2026? Because the next phase of banking isn't about services, it's about control and survivability. And we're entering a period where banks are more cautional, liquidity is more expensive, regulations are stricter, and risk tolerance is near zero. In that world, banks don't ask, is this client profitable? They ask, could this client become a problem? And if the answer isn't clear, no, you're out. This is why relying on a single bank is no longer just naive. It's dangerous. I've seen companies with seven-figure revenues lose access to payroll overnight. I've seen entrepreneurs unable to pay suppliers. I've seen frozen funds with no timeline for release. Not because of fraud, because of policy changes. And here's the uncomfortable truth. The bigger the bank, the worse this problem gets. People assume that big, famous banks are safer. In reality, they're the most aggressive when it comes to cutting clients. Why? Well, because they don't need you. If you are 100k, 200k, even 400k client, you're irrelevant to a mega bank. They will gladly drop you to reduce friction, and they do it at scale. Smaller, smarter banks work differently. They still assess risk, but they value relationship. They understand the international structures. They don't panic and complexity. This is the difference between brand banks and relationship banks. And if you don't understand the difference, you will eventually pay for it. Now, let me be very clear about something. This is not a conspiracy theory. This is not fear-mongering. This is already happening. And the people who will suffer the most are the ones who think it won't happen to me. If you run an international business, if you operate across jurisdictions, if you plan to grow, if you value access to your own money, then the question is not if you'll face this issue, it's when. The smart move today is not optimization, it's redundancy and positioning. Multiple banking relationships, different jurisdictions, banks that understand your profile, structures built before you need them, not after. Because once your account is frozen, you're negotiating from a position of weakness. And banks know that. And at GloboBanks, this is exactly what we work on. Not shortcuts, Not fintech illusions, but real banking structures designed to survive tightening cycles, because the next few years won't be friendly. They won't be flexible, and they definitely won't be forgiving. If you're watching this in the beginning of 2026 and you still believe your single bank account is enough, you're already late. This is your warning. If you want more updates like this, real banking insights, and what's actually happening behind the scenes, subscribe to the channel. And I'll see you next week with another banking reality most people find out about only when it's too late.